The Governing Council decided the following. First, we will continue to conduct net asset purchases under the Pandemic Emergency Purchase Program with a total envelope of 1,800 billion euros until at least the end of March 22, and in any case, until the Governing Council judges that the coronavirus crisis phase is over.
Morning, Joe. Yeah, the European Central Bank doing what economists thought they were going to do. They added to their pandemic emergency purchase program by 500 billion euros. By my count, that takes it up to 1.85 trillion total. Also, obviously, affecting the pound, and you can see the pound at or near a new 37-year low. It was down in the 110 level the last I looked at it. There it is.
An emergency move from the Bank of England has made, they did a dramatic intervention today to try to calm the markets. It's launching a temporary UK government bond buying program to try to get long-term borrowing costs down.
We are doing everything to preserve financial stability. And, you have my assurance on that. I think there is an important task now for the funds to ensure that they are done.
But now sterling's fallen in response to what you've said, that they've got 3 days. Does that complicate matters?
No, I'm afraid this has to be done for the sake of financial stability.
It is an absolutely historic week, both in terms of the speed of Fed purchases and, of course, the magnitude. Here's a chart that shows what's happened since the March. The last 3 weeks have seen this huge ramp up in ways that you've never seen before. Let's look at what's changed here since the Fed last met. We got the $1.9 trillion in relief enacted by Congress, signed by the president.
Senate Democrats have just released the text of their $3.5 trillion budget resolution.
Can you characterize everything that the Fed has done this past week as essentially flooding the system with money?
Yes, exactly.
And there's no end to your ability to do that?
There is no end to our ability to do that.
Simply flooded the system with money?
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally.
We do believe that inflation numbers in 21, which we will see rising.
I can't find any period in history where monetary and fiscal policy were this out of step with the economic circumstances, not one. In 6 weeks last spring, we did more QE, more purchase of treasuries than we did the entire time, the 9-year period from 2009 to 2018.
I think the BOE credibility bus may have left the station already. I'm not sure they're going to be getting on that anytime soon.
And if we ever get an inflationary psychology, like for instance, we did when I was in my 20s, back in the 70s, if we ever get that again, and if you ever got retail actually nervous about inflation, then the one thing that leads inflation, which is commodity prices, it's the easiest tautology there is. Those things can literally scream double or triple with no problem whatsoever.
I am so afraid of a democracy getting the idea that you can just print money to solve all problems, and eventually I know that will fail. At the end, if you print too much, you end up in something like Venezuela.
Is your salary going up at 10% a year? Because the cost of everything you're buying is going up at 10% a year. And the reason for that is the government's printing the money. And that side is really starting to resonate, right? I mean, 10 years ago, people were like, there's no inflation, who cares? Now it's kind of like, well, yeah, there really is inflation.
It's mathematics. The fiat currency is now the error term that solves the growth in the numerator, which is your total global debt, versus the denominator, which is total global GDP. And we have reached a point of no return where the numerator is going to outstrip the growth of the denominator under any plausible scenario, which means you need to print money to solve that debt spiral.
I need a clicker. Oh, there it is. I found it. Good morning, Scotland. Great to be here. What is money? We're going to talk about that, my friend Greg, and myself. Let's see here. Yeah, okay, so what is money? Hang on a second. Next. All right. So we were in the green room talking about this, and Greg and I were kind of pinching each other. It's like, these guys really want to listen to a couple of old farts talk about money? I mean, it's kind of like Harold and Kumar going to White Castle, a funny old movie. So just my background quickly, I'm going to let Greg give his. I'm a sound money advocate, have been for many, many years. I was involved in the prior form of sound money before Bitcoin came along, still have a foot in that camp. But sound money is an important issue. And you know, basically my view is we've got to fix the money to fix the world. Greg's view is it's just math. We're going to talk about that. All right. They tell me if it's nay Scottish, it's crap. So that was a great Saturday Night Live skit. Some of you are probably too young to remember. It was in the 80s. Mike Myers. And I've adopted it here because it's important to recognize that Bitcoin is not crypto. We don't talk about crypto. We talk only about Bitcoin. If it's not Bitcoin, it's crap. Background on Greg.
So, hey guys, thanks so much. One of my slogans is it's only math. I walked into a pub last night and one of my buddies was, and you know, my Twitter buddies, was wearing because math. And you know, I immediately gave him a huge hug. My wife's like, this community is awesome. This is her first conference. But my other slogan is it's for the kids, right? And I'm so proud to be here because I want to leave the world in a better place than I arrived. And we're not on that path right now. We need to make changes. I'm proud to be here, proud to be part of this Bitcoin community. It's unbelievable, okay? So my last name, a little bit on me, a little bit about my family heritage. So FOSS, it's almost like I was put on this world to be a Bitcoiner, right? FOSS stands for free open source software. That's wicked. Like, I didn't actually know that until I got, and I went to a conference in Miami 2 years ago, and they had this FOSS dome, and obviously it wasn't for me, but I thought it was pretty cool. But when I read it closely, doesn't it actually say FOSS do me? Come on, seriously. So I'm actually gonna do you guys, okay? One and all right? So this community is so friggin' cool because, you know, I got to meet Larry Lepard. He's like my brother from another mother, okay? And then Jeff Booth, Natalie Brunel, my good friends at Ibex Mercado who are gonna be out on stage here. But a time for me to try my best. Thank you to Jim and Jordan. If I butcher this, I apologize. Slangiavar. We love Scotland, okay? So thanks for having us. So real quick, this is true, all right? My great uncle created Canada's first motor-powered car. It's called the Fossmobile. You can actually go on the internet. It's quite cool. Henry Ford asked him to go into business, all right? My great uncle said, no, these things will never catch on. So he produced one, all right? I'm real proud of this, and this is a replica that we just created in Canada. It's been going around to different towns. I don't want to say that my uncle's footwear looked like that, but the central banker's footwear looks like that. Don't overthink the simplicity of what is happening in this world from a technological innovation standpoint, okay? For the kids, do your math. Finally, my great-grandfather, my granddad, he was, that's a picture of him with his Sopwith camel, World War I, awarded the Order of the British Empire. I'm so proud of that because only 800 non-British citizens were awarded this medal. My granddad stood for freedom and hope, and that's what Bitcoin is. My granddad would have been a Bitcoiner, okay? We titled this, What is Money? And we're gonna get through it pretty quickly, but remember the things that Bitcoin has over all other forms of money. Verifiability, that's the most important. Transferability, portability, Larry's gonna hit on others. But what is fiat money? This is what we're gonna hit going into the next slides. Fiat money, paper money. It's money based on debt, it's money based on trust, but it is not based on verifiability. It is not scarce. See the problem here? Your top line is your total debt in the USA and your bottom line, blue, is your GDP. Do you see how one is outstripping the other? I mean, you could explain this to a 3-year-old, a grade 3 perhaps, and they would get it. The two lines are not growing in lockstep, it's only math, okay? So Larry's gonna take it from here for a couple of slides, but remember this graph, the simplicity, and the reason I love it so much, this is Larry's pinned tweet on his Twitter profile. Just always go back to that. Always go back and reference the fact that it's pure mathematics. The growth rate of the top line is outstripping the growth rate of the bottom line. Cool? It's about that simple.
Something's got to give.
All right, go ahead.
I forgot in my initial introduction. I'd like to, it's an honor to be here, and I really want to thank Jim and Jordan and Lucy Rose for putting this on. I'm super impressed by this conference, and it's an honor to be with all you guys. Bitcoiners are the best. I mean, we were talking yesterday, you beat a Bitcoiner, you basically know you're going to like them. Okay, so let's talk a little bit about what is money, just the basics. And we all know this, but I'll reiterate it. Money is a medium of exchange and a unit of account. Our money in this world has done reasonably well on those two. It's also a store of value. Fail. Our money is not a store of value. Fiat currency is not a store of value. Voltaire had it right. All fiat currency eventually goes to its natural value, which is 0. Okay? Sound money, in my opinion, is a moral issue. Always has been. When you print money, you steal from people. You steal from savers. It's counterfeiting. It's theft. It's wrong. It's what governments have been doing for years and years. Furthermore, it's important to understand that Keynes was wrong and all our models are built on Keynesianism, okay? The notion that we can have unlimited growth on a limited resource planet is absurd. It's completely absurd. Keynes believes that, and Keynesians believe that we have to have growth at all costs. They even have something called the broken window theory. We'll break windows so people will have to replace them. Give me a break. Everything in this world is about efficiency. Everything in this world should be about deflation, as Jeff is going to talk about. Messing with interest rates, which is what central banks have done, misallocates capital. It makes us all poorer. We all suffer today because of what the central bankers have done to us. It's evil. It's absolutely evil, and we must fight back against it. Prices are information. The central banks have broken the money. Let's just look at how. And it's interesting to note, this is the chart of the M2 money supply from 1900 to 2022. You can notice that from 1900 to 1971, there wasn't a lot of growth. Something happened. We went off the gold standard, and it got worse, progressively worse. And look at it now. It's almost parabolic. The money supply just doubled in 7 years, and it's going a lot higher. Here's Voltaire's point. This is from 1900 measured in gold terms. These are currencies. These are every major currency from that time frame. Have any of them survived? No. In 23, the Weimar Deutschmark collapsed. Okay? Then soon thereafter, you had others. I won't go through every one. But the bottom line is, even the existing currencies compared to gold in 1900 have lost 70 or 90-odd% of their value. It's horrible. Here's another look at it. This is the United States Consumer Price Index. There's that year, 1971 again. What happened? The government began robbing all of us. Final one for me, and then back to Foss. Financialization punishes wage earners. Look at this. This is U.S. data. This is from 1980 to just before present. Look at how much of the income the top 1% have gotten. It's gone from 10% to over 22%. Look at the bottom 50%. They used to get 22% of the income. Now they get less than 12, okay? That's because of financialization. That's because the money is broken, and with the cotillion effect, they know how to steal from us. They can lever up. They get bailed out like they got bailed out in 2008. It's evil. It's wrong. Greg?
So, Larry said it nicely. Money is a ledger, okay? It's just a way of keeping track. And Bitcoin is an immutable digital ledger with digital security. 21 million Bitcoin programmed by math and code. Don't mess with open source software. Don't mess with math. Essentially, don't mess with code. You're going to lose every time. That's Jack Mahler's quote from a brilliant young man into this community, okay? A couple of other cool things. There's been definitions of Bitcoin, digital gold. Even Larry would admit, a gold bug, that Bitcoin is superior. to gold.
No doubt.
It's easily transferable and verifiable. Most importantly, Bitcoin is decentralized, okay? So, famous US hedge fund manager, Paul Tudor Jones, Bitcoin is the fastest horse in the race. Its math is based on, its monetary policy is based on math. I'm going to ask you a quick question that perhaps drives home this point. If the price of gold were to double tomorrow, do you think that supply of gold would still average about 2% annually like it has up until the recent years? Of course not. You'll find ore deposits that will be profitable to bring them to the ground, out of the ground. If the price of Bitcoin doubles tomorrow, does its supply change? No. Math and code. It's so beautiful, people. Don't overthink this, okay? Bitcoin is final settlement. It will be collateral for all other trades in the world. Paul Tudor Jones, Bitcoin is the fastest horse in the race. Conversely, the US dollar, which is a fiat reserve currency, global reserve currency, this is my expression, fiat currency, or excuse me, the US dollar is just the best looking horse at the glue factory. All fiats are debasing. It's the relative rate of decay that changes, and they always compare it to the US dollar. So the US dollar is debasing. It's just that other currencies are debasing quicker. Don't forget that, okay? Here's a cool thing, a great chart that Larry put together. This is adoption rates of different technologies across the world in our history. And here's where we are with Bitcoin. So a chart is worth 1,000 words. You guys all know that my price target on Bitcoin is $2 million per Bitcoin US in today's dollars. We can expand on that later. But using these charts, this is the same methodology that Fidelity uses to place a price target on Bitcoin of 1 million US by the year 2030. It's based on adoption. I think you should look at these charts and use it as, you know, learning from history. Learning from my uncle who said there was no use for an automobile. Don't listen to people who say things about fax machines. Paul Krugman, you fucking idiot. Okay?
There we go. Put $1.
I'll put $1 into the swear jar. Okay? And he's a Nobel Prize winner. And guess what? Fucking Ben Bernanke, who caused this, got the Nobel Prize as well. I mean, if this wasn't the biggest clown show I've ever seen in my life, I actually didn't think I could possibly live this insanity, but we are. Back to not swearing. Now, fuck off, okay? There's 3, okay? There's 3. All right.
Bernanke getting the Nobel Prize is like the Fiat people trolling us. I mean, it's just, it's unbelievable.
It
I mean,
is.
what an insult.
So here we go.
Let's
look at some of these. Let's look at some of the math. We're not going to go through it because we're on a timeline. Look, if Bitcoin grows to equal gold, that's 270,000 per Bitcoin. All of these numbers mean that Bitcoin is silly cheap here on a risk-return basis. And that's how I've spent my whole career managing risk as a hedge fund. You're never 100% certain of a trade, but you've got to play probabilities. You've got to play expected value analysis, okay? And in a nutshell, my $2 million price target per Bitcoin in today's dollars is based on a total addressable market. Stick with me here. The market today is valuing Bitcoin at 20,000. I think that Bitcoin is worth 2 million in today's dollars. That's the market telling me I have a 1% chance of being right. Damn. I know I'm not 100% certain of my price target, but I'm way more certain than 1%, okay? Don't overthink stuff. Put some Bitcoin away on a disciplined basis to hedge yourself against financial crises. Now, this is where I'm going to hand it off to Larry. I've been through 4 financial crises in my life. Each one gets successively worse. Each one kicks some responsibility to the highest rung, which now is governments. There's nowhere else to kick the can.
Right.
We are FUCKKKKED. Does that count for 8? I'm going to put like 8 in there.
Yeah, you got to put a lot in.
We are in a big mess, okay? Over to you, Larry.
Yeah, so what this chart just shows, this is what the Fed has done to us. They've created three massive bubbles. You know, they created the internet bubble based on bailing out LTCM. Then they created the housing bubble because Bernanke wanted to. He took rates down to 1%. And now we've created the everything bubble. And this one is the grossest of all of them. And the bottom line, the green line, is their balance sheet, which is outrageous. But more importantly, what they did that was really a crime was look at this line between 2009 and 2016. They held interest rates at zero for that entire time frame. So the capital asset pricing model says that a cash flow stream is equal to its risk-adjusted return divided by its interest rate. If the interest rate is zero, every asset that earns a profit has infinite value. They totally broke the money, folks. It was beyond the pale. And going back, oops, it doesn't want to go back, doesn't matter. That's how we got the big bubble that we're in. This chart also shows something else very interesting. It shows historically, by the way, all these charts are going to be on my Twitter feed after we're done, so you can get them. No need to take notes. What it shows you, though, is they raise interest rates, something breaks, and they drop rates again. And by the way, we're right in the same cycle just now. So this is what I think is going on as put in a meme, right? I just thought that I saw this, I thought this is perfect. Because these idiots are basically torching the entire world economy. I mean, and you guys certainly feel it here in Britain. They just cost, you know, the Prime Minister her job and a lot of other things. Okay, so here we go. The dollar's a wrecking ball, right? And this is a dollar chart. It shows the last few years. You can see what's happened since the Fed changed policy. And it's a parabola. It's a parabola straight up. And that's because, as Greg says, you know, this is the best horse in a glue factory, okay? Here's the thing. Anyone who's involved in financial markets will tell you parabolic moves do not end well. They don't. This is a tsunami. The water is going out. It's getting drawn out into the dollar. The dollar's going to be the last one to break, but it is going to break. Okay, back to Greg.
And quickly, so building on that, this is a chart of total global debt, all right? Some of these numbers are somewhat, we can argue with them that they could actually be meaningfully higher than this. For example, the numbers I use from the Institute of International Finance, the same numbers Jeff Booth uses, has total global debt at $400 trillion. But stick with me, it doesn't matter. Just look at the growth curve, know that things are gonna break because credit markets run the world, people. Equity markets are a subordinate claim. Credit is the dog, you've heard me say this probably. Equity is just the tail. Equity markets globally, sorry Larry, okay. Back there, equity markets are only $100 trillion. Total global debt is 4 times the size of equity markets. And debt has a prior claim. Don't you think you should look at what the prior claim thinks about the world before you go into your derivatives or your second level? Now this is the chart that blew me away. This chart shows your federal budget deficit as projected by the Congressional Budget Office. This is the USA government projecting this as their future. Would you invest in this piece of shit? Like, honestly, this is management's forecast. And you're supposed to buy this? By the way, this was when debt was about 1.5%.
Yeah.
We're now at 4%, 4.25% in US 10 years. When that debt rolls over, because in a debt spiral, debt doesn't mature, people. It has to be refinanced. It has to roll over. Again, would you buy this?
Yeah, I would only say this looks horrible. And by the way, we're already running worse numbers than this. We're going to be at a 10% deficit probably in this coming year.
So imagine, yeah, you go to Wall Street and you try and sell this. They're like, sold to you. I don't want this. Hey, dude, this is what runs your bank. Mr. Goldman Sachs, if you don't understand that your bank is a derivative of this, you should get Paul Krugman as your CEO. Like, seriously, this is so simple. All right. Credit always leads. Love Mises. Read that when you have a chance. Where are we right now? It's this simple. We are in a sovereign debt crisis because there's nowhere higher to kick the can, and the Fed is trapped. Damned if they tighten, global economy collapse, and perhaps a depression. Damned if they don't, meaning inflation will rage, but at least we have a longer runway. Doesn't matter. All paths lead to Bitcoin. All paths lead to Bitcoin. I've never seen a simpler trade in my 35 years of managing risk. Everything leads to Bitcoin. It is so undervalued. The asymmetric upside is amazing. Well, we're in a debt spiral. Here's why it's that simple. But you need insurance. You need insurance.
Right. Bitcoin is insurance. And just to build on Greg's point, this is an important thing to understand. So sovereigns are running deficits. Their debt grows. They have inflation as a result of the money printing to address that. The inflation means that their interest rates go up because people sell their bonds, so the interest rates get higher. The interest rates get higher, their interest expense gets higher. Therefore, their deficit gets higher. Therefore, they have to sell more bonds. Okay, selling more bonds makes the total bond balance bigger. Total balance bigger with a bigger interest rate, more deficit. You see where I'm going here? It's a doom loop. It just keeps getting worse and worse. The U.S. had a good year this year because in 2021, we had a huge gain in the stock market, and so U.S. taxable income was $600 billion above trend for 1 year. That's going to go away. Next year, the U.S. is going to run a $2 billion plus deficit. So at the end of next year, the U.S. is going to have $33 billion worth of debt.
Trillion.
I'm sorry, $1 trillion worth of debt. Multiply times 5%, and that's $1.5 trillion in interest expense. Now, it's going to take a little time to get there because the debt doesn't all mature in 1 year. But the point is, we were running $300 billion of interest expense a few years ago. That number, $300 billion, is going to go to $1.5 trillion. That's going to blow out the $1.5 trillion is more than we spend on Social Security. It's almost twice what we spend on defense. The U.S. budget is broken because the money is broken because interest rates are broken. Okay, how do I get the next one? Here we go. So things are starting to break, right? We can see it. Japan broke this summer. The 10-year went through the 25 bips mark. They had a serious problem. Then Italy had a problem, and we had an anti-fragmentation strategy by Madame Solarium. And then England's more recent problems you're all very much aware of. Give me the next one. Okay. It's a little hard to see, but this is important, right? So the Great British currency, GBP currency in dollar terms, is the white line, and you can see it's trending down. And then the yield on the 10-year gilt is the blue line. You can see it's trending up. And they're both just kind of trending until this summer, when policymakers decided it was a really good idea to guarantee a cap on electrical costs and utility costs for people in the country. Totally understandable. Kind of hard when you're running a pub and your electrical cost goes up 5x, and at the same time give a tax cut to people. And the market said, yeah, okay, sold to you, right? And it was going in a trend, but then it got extremely disorderly, right? And of course, that led to they had to step in. And as you can see, you know, the BOE pledges, this is the headline I love, BOE pledges unlimited bond buying to avert imminent gilts crash. As they said, they were within days of it looking like 2008. It was a bad, bad scene.
So can we go back there and just focus on something?
Absolutely, yep.
This is key, people. When interest rates get crazy low, the only way a pension plan can meet their bogey, which is their commitment to pensioners, is by leveraging a low interest rate, right? So they tried to turn a 30-year yield, which was 1.25%, into a higher return by margining, borrowing 3 times. They tried to turn that 1.25% yield into 3.75%. The problem is leverage works in both ways. The LDI, or liability-driven investing, that was very popular over here in the UK market, man, that's going to cost you pensioners forever. That strategy lost 50%, 50% without leverage. So help me with the math here. If you levered it 3 times and it lost 50% unlevered, damn, it lost 150% of your savings, which meant it stole capital from other pools in your pension plan. That's criminal. I can't say it any other way.
Yeah. I mean, if the people running the pensions in this country don't go to jail, something's wrong. I mean, to play with pensioner money levered up the way they did, unbelievable.
So let's bring this home because it's we got 3 minutes left.
Time. Okay. So bottom line, what do we think is going to happen next? Things are going to break. The Fed's going to have to pivot. Bitcoin's going to launch, and we'll have a better system. It's going to be ugly going through it, but on the other side, it'll be much more equitable. We believe that we sit at a key moment in monetary history, And we sleep well at night knowing that we own the world's best money. That's how we view it.
Just switch it and then introduce this looking glass.
Oh, yeah, okay, good. So the next thing is something I'm very proud that my friend has done. So Greg has taken it upon himself, his own nickel, to set up an educational foundation to help people understand Bitcoin. It's Looking Glass. You can find it on the web. He funds it. It's really, I mean, this is a guy who basically is doing it all for the kids. I mean, I'm still in a business trying to make money. This guy is doing it charitably. He wants to see a better world, as do I. But, I mean, this is really something to behold.
But I'm not doing it by myself. We have some really, really solid cooperation from around the world, all right? A beautiful lady from Colombia who's succeeded in getting this program into the schools at El Salvador, okay? You know that country has adopted Bitcoin as legal tender. That country is gonna rock and roll, okay? I live in Canada. My best advice to Canada, if we don't adopt Bitcoin, learn Spanish. Learn Spanish, Canada, because we will be behind Central America. For yourselves personally, I think we might have less than a minute left. Do me a favor, for the kids, get yourselves off of zero allocation to Bitcoin. Something above zero to start for your children, Larry. Bitcoin
we're in
is
Scotland. We thought
freedom.
this was the appropriate closing
All right?
slide.
Thank you.